The Efficient Frontier, by El Castillo Investments. The efficient frontier is a concept that is widely used in finance and investment management. It represents the set of portfolios that offer the highest expected returns for a given level of risk or the lowest risk for a given level of expected return. In this article, we will discuss the importance of the efficient frontier and its significance in portfolio optimization. The efficient frontier is essential in portfolio optimization because it allows investors to find the optimal portfolio that maximizes returns while minimizing risk. The concept was first introduced by Harry Markowitz in 1952 in his paper, Portfolio Selection. Markowitz argued that investors should focus on the risk and return of their portfolio as a whole, rather than just the individual securities in it. The efficient frontier is formed by plotting the expected returns of different portfolios against their corresponding risks. The curve represents the set of portfolios that offer the highest returns for a given level of risk, or the lowest risk for a given level of expected return. The optimal portfolio lies on the efficient frontier, and it is the portfolio that provides the highest return for a given level of risk or the lowest risk for a given level of expected return. The efficient frontier is important because it provides investors with a tool to optimize their portfolios. By identifying the optimal portfolio on the efficient frontier, investors can achieve the highest possible returns for a given level of risk, or the lowest possible risk for a given level of expected return. This is achieved by diversifying their investments across different asset classes and securities, thereby reducing their exposure to individual securities risk. In addition to optimizing portfolios, the efficient frontier also provides a framework for measuring the performance of investment managers. By comparing the performance of investment managers against the efficient frontier, investors can determine whether their managers are generating excess returns or simply taking on additional risk. Moreover, the efficient frontier is not a static concept. As market conditions and economic factors change, the efficient frontier shifts, and new optimal portfolios emerge. Therefore, investors need to continuously review their portfolios and adjust them accordingly to ensure that they remain on the efficient frontier. In conclusion, the efficient frontier is a crucial concept in finance and investment management. It provides investors with a framework to optimize their portfolios by identifying the optimal portfolio that provides the highest returns for a given level of risk, or the lowest risk for a given level of expected return. The efficient frontier also allows investors to measure the performance of their investment managers and adapt their portfolios to changing market conditions. Therefore, it is essential for investors to understand the efficient frontier and incorporate it into their investment strategy.
Do you want to create your own efficient frontier? First, Google portfoliovisualizer.com. Then, you will scroll down and find Portfolio Optimization, click on Forecasted Efficient Frontier. On the next page, change portfolio type to tickers. Place all your tickers in the corresponding section and type the percentage that is allocated to that specific ticker. Along with asset allocation, you need to find out the expected return for each given asset. If you don't know the expected return for a given asset, go to Yahoo Finance and search for the ticker. Go to the Analysis section and search for expected growth for the next 5 years. Once you have your asset allocation and growth for all the tickers, click View to generate the efficient frontier. To analyze the efficient frontier you created, look at the dot that represents your portfolio. This is how you will know the level of risk you are taking and the expected return you should generate while holding this portfolio. Knowing where your portfolio lands in the efficient frontier is a great tool to analyze risk and expected returns.
Want to learn more? Follow us on Instagram or visit our website, elcastilloinvestments.com.